Welcome back. Well, summer driving season is coming to an end, and while that usually means lower demand for gasoline and distillates, tight inventory levels and rising exports could throw a wrench in what consumers can expect to pay at the pumps right across Canada. For more, we're joined by Roger McKnight, Chief Petroleum Analyst at Enpro International. Welcome, Roger. I guess the first thing we should start with is what everyone wants to know. What can Canadians expect to pay at the pumps in the week ahead?
We're going west to east, Vancouver to Halifax.
Let's do it.
Okay. In Vancouver, I'm looking at prices staying pretty well the same at about $1.90 a litre, which doesn't sound like a bargain to those in the east, but that's where it is. Calgary and Regina up 3, Calgary up to $1.47, and Regina up to $1.59. Everything's going in the doldrums as far as Winnipeg and Southern Ontario, Toronto is concerned. I can't see any movement there at all, any reason for it. So Winnipeg, I'm keeping at $1.68, and Southern Ontario, Toronto mainly, $1.55. Montreal going down to $1.80, which looks like a heck of a big differential, but that's the way it is. And the Maritimes down 5 cents to $1.64. It probably could go down more when the regulatory guys kick into gear.
Still, these prices look like a bit of a relief after what we have been seeing this summer. How long do you expect the slowdown in prices to last?
I think we're safe until Labor Day, and then we go into the so-called shoulder season where the gasoline demand sort of drops off, and there's no really high demand for heating oil or heating oil. So, but there's trouble on the horizon. And when I just look at the inventory, I think 2 weeks ago we had more or less the same conversation. The U.S. inventories of distillates are down 24% versus the 5-year average. There is no way on earth that they're going to be able to make that up for the coming winter heating season. Now, what happens in the fall is that gasoline prices tend to follow the price movements of distillates, which is diesel and heating oil. Those inventories are very low, and that's going to start driving up diesel prices, which are already exceedingly high versus the wholesale price of gasoline. We've got differentials now in the east of diesel wholesale prices being 45 cents a litre higher than gasoline. Normally, they're about the same at this time of year. In the west, it's even worse. Diesel is 56 cents a litre higher than gasoline on the wholesale level. That's absolutely unheard of, and it's footsteps as far as I'm concerned.
Wow. And, you know, we've been talking so much about how consumers are pulling back on their spending, maybe avoiding spending where they can. Obviously, you can't do that so much when it comes to gasoline, but are you noticing any changes in consumer behavior?
I'm noticing that people aren't filling up. They're playing the pricing game. They're buying, say, instead of 80 liters, they're buying 20 and waiting for the next news bulletin to come out. What's going to happen the next day? But that's the way I see things going. Gasoline demand is actually dropping off when I look at the inventory report, but the opposite is true for jet fuel and diesel. That demand is increasing. So I'm telling you got to watch the diesel and distillate price trends to follow the gasoline trends in the near future. It's going to be trouble.
I guess, what is your outlook for refiners looking to recoup the 24% shortfall in distillate inventory this fall and winter?
I can't. They're running at 94% capacity, and we're coming into refineries go into 2 maintenance seasons. One to get ready for the gasoline driving season, so refineries start gearing down about January to do this turnover, and then we have the second part is getting ready for the heating oil season, and refiners start to slow down to change the crude profile that they want to make more diesel and heating oil. So they're running at 94% capacity nationally in the States. I can't see them going any higher, and if we go into refinery maintenance season, or if we have a refinery problem like we recently had it in Indiana, then things are going to get really, really tough. And the other thing is that the crude oil inventories in the United States are really being influenced by the draws from the Strategic Petroleum Reserve. And that was a program introduced by President Biden. They've drawn 168 million barrels out of the SPO over the past year. But that program comes to an end in December. So your crude oil inventories are going to start dropping even further, and that's going to support higher diesel and therefore gasoline prices in the fall.